She is ugly, she is insecure, but she has her moments. That is what I'm looking at, thinking at least when I'm looking at the Bitcoin chart in the last 2 days. 2 days ago I said we had a pump during the London session, dump during New York, pump during the London session, dump during New York, and then we had another try, and now we're just kind of going sideways. Actually, this looks super ugly because yes, we took at the highs, but we did ever so slightly, and now we're not seeing any follow through. But today is the most important day of the week because we have Fomc approximately 4.5 hours after New York Open, where the Central Bank of the United States is going to decide if they're going to rise the interest rates. That is where we're going to look at today. If you like the content, please do me a favor, like, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think this is useful. Also feel free to follow me on Twitter and Instagram. Those links you will find in the description. Without further ado, let's start diving in. So let's first start off here with BTC. This is on the 1 hour. Like I said, it actually looks very ugly. We are past now the golden pocket. We tapped twice in the 78.6. I don't think this is going to be resistance anymore at all, so I'm going to take it out. The two most important levels now that I'm looking out for to take out and then to maybe go lower are these highs right here. So these very ugly highs that we put in, they're almost on the exact same level. I think on Coinbase we took it out, or maybe on Binance, but not on all exchanges, so that just looks very ugly. And then we still have that daily level above us, 27,707. I'm really also looking out for that level. If we hit it, what kind of reaction we're getting, and if we're getting a nice reaction, I'm going to try to short it. After that, we do not have a whole lot anymore. We only have the highs here, and I will right away also mark these. That is 28,137 to be precise, so let's make it 38,150. Those are the absolute highs, and above that, remember what I said yesterday, we have a box 28,600 to 29,700. Then we're entering this entire trading range again that we have been for quite a while, but we then really need to find acceptance with at least a few hourly candles or 4 hourly candles. On the bottom though, it's setting up for a major liquidity run. So we have these lows right here that we put in already on Monday. And it's okay if we maybe quickly take an SFP and then go higher, but I need to see a very fast buyback. Then I might be tempted to long it to go for the highs. But if we do not have a very quick buyback, then this could become very ugly, and we could see a very big drop to the downside, because as you can see, this we just slowly grinding higher. In other words, they gave traders a lot of time and a lot of chances to put in long trades without being stopped out. And these long trades are underneath all of these lows, or at least they will most likely put the stop losses underneath these lows. So if we then dump down on, let's say, bad news from the central bank, this could be a very fast major move, and then we're talking about approximately 25,500. That will be a 5 to 6% move from here. I wouldn't be surprised if we would get something like that today. Of course, everything stands and falls with what the central bank in the United States is going to say. Right now, 99% of all participants think that the interest rate will stay the same. So no interest rate hike. There's only this one lost dude probably that thought we are going to get a rate hike, but no interest rate hike. To be honest, I'm a little bit surprised. Reason why is because in the last few months we're seeing inflation rise. It went from 3 to 3.2 to 3.7. So inflation is not under control. This could be a blip on the chart, but as of for now, I wouldn't be surprised if the central bank says, you know what, we are going to rise the interest rates again with 0.25%. If that happens, no one is expecting it, because you see that 99% is expecting they will stay the same, and then we can see a major drop to the downside. If it is no further interest rate hike, mark my words, you will right away see everywhere Fed is pivoting, because the step after, or at least as a lot of people are thinking, is that then the Fed will be thinking about lowering the interest rates instead of rising the interest rates. I think that's a whole different story. They could maybe pause for a couple of months, see how the data comes in, and then eventually start to hiking the interest rate again if the data is bad. But a lot of people will probably see that as very good news. that was the end. We are only now going to get a decrease in rate hike. So on the chart it looks a bit like this. Rate hikes go up, 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 then maybe a pause and then down, down, down. That's what a lot of people expect, but I also wouldn't be surprised if we do something like this to the upside, flat, and then eventually after a while we go up again, and then you can see a big drop in the markets. So actually I expect a relatively good bounce to the upside once the Fed starts pivoting, quote unquote pivoting, or pausing with the interest rate hikes, because that will be the first time in, I think, probably around 2 years there will be a major green sign to the markets, and then I think we can really go higher. If that happens, to be honest, I don't think that we're getting the 27,700 as a reversal, because this actually is not that far. We're talking about approximately 2%, so I wouldn't be surprised if we pump up much higher. So be careful. If you have positions open just before the FOMC, make sure you have your stop loss in place, or just close your positions. Make sure that you do not get caught up in the first 5 to 10 minutes. After a half an hour, Jerome Powell will come up and he will explain more about the rate hike and what he's expecting for the next period to come. So be careful. These are my trades. These are my levels. I'm staying very cautious to the downside because that could be a liquidity run. Then we have the tops here, 27,485, the daily 27,707, and then we have the top at 28,150, and above that we are entering this major box. Very interesting, very exciting day. So yeah, I hope that this was useful and that you are able to put in some good trades today. If you like the content, guys, please do me a favor, like, subscribe, click the bell, click the all so you don't miss anything. Leave me a comment, share the video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram. Those links you will also find in the description. And see you guys very soon again in the next one. Bye bye.